Good afternoon. I hope everyone's doing well. It is Monday around 2 p.m. Eastern Time, and we're doing a live What's on Your Mind. I want to talk about a few topics today. One is DeepSeek. What does that mean for NVIDIA, the hyperscalers, peak sentiment? What is a peak sentiment moment? I wrote about this on Twitter last Thursday. Some other topics too, if we have time. Maybe AI is a truth arbiter, intellect versus intuition, China tariffs. There's so much to get into. There's so much happening. It's wild, right? Like if you want to stay on top of this, you need technology. You really do. And you need a discipline, you need a routine. Maybe we can even share some of the technology we use. We can do that live. That'd be fun. Tell you the AI tool that we'll continue to iterate on and build upon. I had a good weekend. I took my kids to Chuck E. Cheese. That was fun. We used to go there as a kid growing up. They had the live animatrix robots. They don't have that this time. It's basically an arcade with some pizza and chicken wings. But it was great to play skee ball with them. And I had them watch Mary Poppins, the original 1964 version. I wasn't sure if they'd be into it because the production quality is just not like what it is today, but they really got into it. The first 15 minutes were slow, but they really got into it. They love the music. And I thought that was really cool. It's great when you can pass something along to your kids and they enjoy it. I've been indoctrinating them around like 80s synth pop music. Then we did 80s rock and roll, like Whitesnake and John Bon Jovi and like Def Leppard. That was like a season. We got rid of the classical music stuff early, like when you, apparently play classical music for kids' brains, it helps. I don't know. We did that anyway. So now we're getting to the fun stuff. So much happening, right? So much happening in markets. I went to the dry cleaner this morning. My wife and I are going to Dubai tomorrow. And whenever I'm in the car, I always turn on Bloomberg just to get a basic sense of what people are talking about. I want to get a read on what consensus is. I'm less interested in hearing what people actually have to say. I want to know why they say what they say. Because if you're doing your job, you're not listening to the radio to develop a point of view, right? And so the host said, hey, what's this DeepSeek and what does it mean for NVIDIA? And nothing wrong with the host not knowing these things. They're a host. It's not their job. So the guest comes on. He says, look, I read about this 2 days ago. So immediately, look, consensus is behind the ball and trying to price some information very quickly. And they're on edge. And obviously you see that in the price of different securities. I'm going to share my screen here and play this clip for those that missed the interview I had with Michael Preck around DeepSeek. This is 2 weeks ago. I'm going to hit play.
US. Oh my God, let's get to DeepSeek now. So let's just, right now it's being framed on two levels. One is it's US versus China, that you're the Chinese company that created an LLM model at a fraction of the cost to the US. Oh my God, we're losing. Okay, that's one takeaway that people have. Second is, if this company is able to do it for pittance relative to the hundreds of billions being spent, was something wrong with this picture? And the answer is both of these things are more interesting. DeepSeek itself is something that Liang Wenfeng is a founder. He's a great entrepreneur. He could be an Elon in China in a world that was more startup friendly in China right now under Xi. He could be the next Alibaba. He had a hedge fund, a macro hedge fund, and he's an AI scientist. And the technologies that he used to create DeepSeek are very clever, efficient ways of using far lesser capable processors to do far more than the competing models. And he did that through genuine innovation. I've spent a lot of time in the weeds of this at the technical level. And when you look at all this stuff, he basically created some very hardcore engineering efficiencies in terms of a mixture of experts and a bunch of underlying technologies. He created a very sparse model where the model has 300 plus billion parameters, but at any given time, it has over 30 billion that are activated that can be run only on 2,000 GPUs as opposed to 30,000 GPUs or 300,000. And then because of the optimization of the data training and the inference work, et cetera, and I'm going to set a high level to make it accessible to people, it can meet or beat most of the benchmarks from Llama and OpenAI and so on. And the benchmarks are the way that all of the scientists basically and the researchers compare these models. And so right now, why it's gotten everyone's attention is on the text-based stuff. it has met or slightly beaten most of the models on a bunch of different things like coding and math and so on. And that's why it's interesting.
Yes. So meet or beat various benchmark models, including Meta, that's spending tens of billions of dollars, in capex on NVIDIA chips, and OpenAI, who just last Thursday announced with Microsoft and Oracle and SoftBank Project Stargate, where they're going to spend $500 billion on these data centers. So talk about like rug pull, talk about narrative rug pull, right? So I guess a few observations. One is that DeepSeek news is 2 weeks old. And I think it was actually about 2 weeks ago, we talked about information diffusion and focusing on the margin of information that is entering awareness and ignoring what has the focus of the market. That's a classic example. So DeepSeek was known information 2 weeks ago. People are just now trying to develop a point of view. Their money managers showed up to work on Monday. They placed most of their trades in the afternoon. They got whacked on the head, and they're trying to figure out what do they do. Okay, it's 2:25. Some of them are probably listening right now. So we'll get to that actually too. So other takes on DeepSeek. So DeepSeek is legitimate and it's real. Okay, they spent $6 million as quant fund in China. Very capable quant fund guy. I think someone put on Twitter very well. Q Capital said effectively like the Jim Simons of China. He's not quite that, but they incubated an LLM, and for $6 million, it rivals OpenAI. Now, there are other costs not on the 6 million, just to be clear. I mean, other training runs, for example, that's a number. We don't know what that number is. So there are other costs that are out there, but regardless, whether 6 million, 20 million, 30 million, 10 million, 50 million, the return on investment is dramatically higher than OpenAI. Now, they did stand on the shoulders of OpenAI, right? Actually, they really stood on the shoulders of Meta, because Meta published a white paper explaining how they built their model. They explained their data sources, the training methods, the architecture, and OpenAI hasn't done that. Remember, OpenAI started as a nominally an open source nonprofit, and they've pivoted to profit. And here you have this startup in China that has done an open source reveal for all the world to benefit. China, of all places, too, is like the country that has the most cybersecurity attacks on American IP, including OpenAI, right? So many mind-bending things about what just happened here. So that's questioning a lot of people's thesis around what does this mean for hyperscalers and NVIDIA and all the rest. So really, really incredible to just see all of this play out. Before we get to that, I do want to talk about peak sentiment and just kind of work backwards here and where we are. To know where you're going, you got to know where we've been, right? So this is something I wrote about on Twitter. We wrote about in our newsletter this weekend. It's from last Friday at 3:10 p.m. That was your warning call, people. Friday, 3:10 p.m. Actually, a similar message on Thursday, but the post is called "Mr. Market's a Manic Depressive." And the headline is like 2 Mondays ago, you had a gap down. There's a lot of panic, a lot of fear in the market. You're supposed to buy into that. We did. And now 2 weeks later, you're at all-time highs. And what you have here is this concept of peak sentiment. What that means is everyone's bulled up, everyone's excited, everyone's all in, everyone's put their chips on the table. And that came from two things. One is the Trump inauguration. Now, remember, early November, after the election, you had an incredible Trump bump, this animal spirits rally that happened. You had a similar effect post-inauguration, but not as significant as November 3rd, because back in the election, people were wrongly positioned. They thought it'd be a drawn-out election that would be disputed and a lot of uncertainty and overhang. Here, people saw the inauguration. It's not as if we weren't sure who would be inaugurated, okay? So that effect will be a little bit more muted. But the second thing we had on Thursday, actually two other events on Thursday. We had Trump speaking at the World Economic Forum in Davos, which is a conference of these world business leaders like the Jamie Dimons of the world and Brian Moynihan's, various executives, they get together, and leaders of government, okay? Trump zooms in, which is just kind of hilarious juxtaposition, but I mean, think about that. He is the object of discussion in Davos. He's not there. He does a Zoom call, and he's like, look, I'm going to tariff like you, and you, right? It's like inverse Oprah. You get a car, you get a car, you get a tariff, you get a tariff, you get a tariff. That wasn't actually his main message. I was just having fun there. But his main message was the world needs to lower interest rates. The world needs to lower interest rates. And on that day, every sector in the market went up and international stocks went up. Okay. So that, that combined with this Project Stargate news, which is, again, these hyperscalers and Oracle and OpenAI saying we're going to spend $500 billion to build a super data center, is what created that peak sentiment moment, right? So that's what peak sentiment is. Everyone gets incredibly jazzed up, bulled up, put all their chips on the table. There's no one left to buy. It's the inverse of what we saw 2 Mondays ago. It has to do with like sentiment and positioning. Fundamentals matter, earnings growth matter, the macro matters, policy, all that matters, yes. But tactically, this is just about positioning. So when everyone's in the market, there's no one left to buy, right? That's what happens. That's what happens, right? So that then led to the market being more vulnerable to incoming news like a DeepSeek. It could have been anything else. In fact, even if DeepSeek hadn't happened, I think markets would have been down. And we'll come back to that too. If you have a question, let me know, right? So there are other sectors in the market that look vulnerable as well. Right now, what DeepSeek has impacted is the data center theme. The other thing I heard on Bloomberg, they said it's tech is down. Like, no. They got it wrong. It's the data center theme that's down. It's not just tech. It's not just Actually, it's not even tech. Meta's up. Meta's up. It's semiconductors. Look at Constellation Energy. Okay, look at Vistra. Look at Talon. It's the data center theme that's down, which is one of the most powerful themes in the market because it is the primary animating theme for the market. It's the most powerful story in the market right now is the data center theme, right? The other themes in the market, like GLP-1s, they're on their back with Eli Lilly and Novo taking a step back, right? There's a financials theme with the deregulation, but the AI theme is the data center theme, right? So that's on its heels right now. And then you have this DeepSeek news come out. By the way, I tried it. It's super interesting. It's super cool. It shows you chain of reasoning. So the AI will say, well, okay, this person asked me a question of should I sell NVIDIA now? And they're probably an amateur investor and I should answer it this way. It's super cool to watch. Really cool to watch. And then OpenAI said that they're going to make O3 model mini free for everyone as a competitive response to DeepSeek. So OpenAI is dropping prices. Now you want to own businesses that raise prices, right? They're dropping prices. Why? Competitive response. And this goes back to a thesis I wrote in November 23 called the CapEx receiver thesis. It's a mouthful. What it says is be careful of the application layer because you're going to have a competitive fist fight, like search engine wars all over again. People just trying to own the consumer and do whatever it takes to spend and win that game. And you're as smart as your dumbest competitor, right? If your competitor drops prices, you have to match. By the way, the funny thing about DeepSeek, they have so much demand right now that they're getting outages. They're getting outages because of the demand for DeepSeek. And they're getting outages because they don't have enough NVIDIA chips, and NVIDIA is down 17%. I mean, you can't make this up. I hope you can appreciate the irony and the humor that the universe has created for us today. DeepSeek hurt NVIDIA. DeepSeek needs NVIDIA chips. I mean, it's just kind of funny, right? So what else is happening here? That's peak sentiment, right? Now the pendulum is swinging back. Take a look at what is working today. Healthcare. We've been talking about healthcare the last few weeks. Defense is really the main idea around what's working. People are fearful, so they bought things that do well when they get scared, right? They bought healthcare. So look at healthcare, up 2%. By the way, it also looked like it had a breakaway gap up. Look at that. Do you see that? So gap up and then running. So it's a kind of a panic when you see that, isn't it? I mean, you see that in the VIX. The VIX is up 20%. That's great. I like to see that. That's not complacency. People have fear. We talked about 3 healthcare stocks last time. Really funny. They all took off since then. Look at CVS. CVS back to the 200-day moving average. By the way, if you don't like CVS, there's your chance to get out right there. Okay, back to the 200-day moving average. That's what we did right here. I'm not saying you should or shouldn't, but you have an opportunity, I would say, at that point. So here's Elevance. Elevance up 3% today. Here's Cigna. Cigna up 3.5% today. Another strong breakaway gap up. This is what a Lumida stocking stuffer picks. So I think those are all pretty interesting businesses, but different pros and cons. I want to spend time on that. So what about utilities? So utilities down 2.4% today, but this is actually a mixed story because what's happened here is you've got the independent power producers like Constellation Energy down 20%. Now, the independent power producers are unregulated, meaning they can set prices in a voluntary bilateral transaction that's unregulated. Constellation Energy owns 3 Mile Island. They're the one that inked that deal with Microsoft. So they're down 20%. So let's take a look at what other ones are out here. Talon Energy, down 22%. Okay. Take a look at Vistra, down 28%. So, this is a data center pullback. It's not a tech pullback. It's a data center theme correction, and a pretty significant one also, right? So what else went up? Consumer staples, right? People hated consumer staples. Look at this. Look at the gap up in consumer staples. Gap up, and then it just runs. I think these are people just buying the ETF, and they don't really care what's under the hood. They're just buying the ETF, and that means they're picking up Costco, Walmart, Procter & Gamble, Coca-Cola, Pepsi, Philip Morris. Philip Morris is a dividend-paying stock. It looks like all-time high, right? Up 3%. So really interesting, right? Really interesting rotations taking place here. Industrials pulling back. I think this is going to be weak. I'd be very cautious around industrials right now. This is part of what I was saying in our newsletter. Not part of what we said in our newsletter. Like be cautious around this category, and there's some others too. So I think the DeepSeek news is more like a match that lit the fuel caused by this peak sentiment bump. So let's take a look at a few other items here. So I had this colorful metaphor I put on a Sunday. The DeepSeek news and tariffs on Colombia. Oh, that didn't help either. This tariffs on Colombia thing. Now, I think that's reversed. Someone can comment on that. It's like an uppercut followed by a jab to Mr. Market. So when everyone's hyped up and excited, they're most vulnerable because they're offsides, right? It's like, I'm not a boxer. I do CrossFit now and then you do some boxing, but like your position matters. How you hold yourself on the ground matters. So when you're offsides in the market, it's the same thing as being offsides in how you hold yourself. You're literally off balance. So you're more vulnerable to incoming negative news flow, like an uppercut or a jab in this case. So there's a two-way punch that Mr. Market is dealing with. And that is, it's like a crowded theater. People rushed into the theater, then they're rushing out of the theater. That's herd mentality, right? So anyone who thinks that markets are efficient are wrong. I hope we've dispelled that idea. It's just not true. There's no random walk here. It's a run followed by a run in followed by a run out. All right. Let's go to the ledger. Let's talk about some of the things that came up in the ledger. I'm going to share my screen again here. By the way, if you're in Dubai, give me a holler. I'll be there for a week. We can hang out. Be a lot of fun. Looking forward to it. A lot of growth in Dubai. So this is from the Crypto Ball. Got a selfie with Howard Lutnick. That was fun. By the way, I told Howard, I was like, hey, keep the tariffs high on China. Before I could complete my sentence, he's like, no sweat. I was going to say, like, keep the tariffs high in China, but, go easy on the allies in Mexico and Canada and all that stuff. Like, probably open international markets like France and Italy and Germany. Let's sell American cars there. But anyway, so it's funny. Like, these events, people are accessible. They listen. You can have a conversation. And people are trying to figure out what is the tariff strategy. They're still in discovery, which we talked about last time we were here, right? So, here, we talk about a few months ago, before the election, and I mentioned this a bit earlier, is that, we have a thematic market, and before the election, virtually every single theme was in correction. GLPs, big tech, defense, staples, energy. And going into last week, most of these were actually on the other side of that, right? So not all, but most of them. So, you have ETFs like Momentum. Momentum is a good representation for what I call the best and the rest. It's not really a pure momentum ETF. There are other ETFs that do a better job of that. But, this ETF contains things that have gone generally up and to the right, and generally the best businesses in the world. These are indestructible businesses. JP Morgan, Walmart, NVIDIA, these are dominant monopoly players, right? Philip Morris, Intuitive Surgical. These are the stocks that you can tell your friends about, and, they're like, oh, wow, it's a great business. But great business doesn't mean great price. Price is what you pay, value is what you get. Now, that theme has worked extremely well the last 12 months. I wrote about it in January of last year. It's called the best and the rest theme in January. We noticed that investors just gobbling up these names. And now that's giving back. This is something we've been writing about. Not all of them, but the most expensive ones have been. Take a look at like Exxon, 70 bips down today. I think this is rolling over. I'm going to share my screen here. Okay, I think it's going to bleed out. That's Exxon. Take a look at FICO. This is almost done. It's not at the 200-day yet, but it has kind of leaked. By the way, it's still more expensive than NVIDIA and not growing as fast. So these are the big rotations that are underway in the market. Okay, let's get back to the newsletter. The good news is that earnings are strong, right? Corporate America is delivering on earnings overall. The actual results are coming in better than expectations. So, like, big picture, you should stay invested, right? Don't confuse the squiggle for the larger trend. This is Goldilocks. We have disinflation. We have growing earnings. Unemployment rate is going to decline, especially with the immigration changes. So real incomes are higher. So Goldman noted that this is the most friendly positioning and sentiment backdrop we've seen to Max 7 prints in quite some time. We disagree with that, but I mean, they're right that it is more friendly positioning, but doesn't mean that means those stocks are going to go up. Obviously, we see that today. So here are some of the things we were looking at. I published this on Sunday. I write this newsletter Saturday morning, by the way, but we don't know what the futures are doing. The release drops at 11 a.m. Eastern time. This is Kinder Morgan. It's a midstream energy play. These are great businesses, by the way. The issue is that they're over positioned. Okay, take a look at KMI today. Boom, down 9%. Back to the 200-day moving average. Yeah, interesting support level. Want to watch what it does from here. Okay, great business. The reason why it's a great business is they're not indexed to the price of oil. They benefit from moving more oil through the pipes. And Trump is a pro-oil, and by the way, no one's talking about it, pro-coal president. You have to listen carefully. He mentioned that briefly last Thursday. That's what I'm focused on now. Like, what's going on in coal? We think we might have found an idea there, but we're still researching. Here's Vistra. This was Sunday. You can look at where it was on Friday at the close. We saw Vistra just totally smashed, right? Down 29%. It's insane. These are These are massive moves, right? There's Vistra right there, right? We saw that a bit earlier. Okay, JP Morgan bang. This one hasn't quite cracked. Everyone loves JP Morgan. It's still up a little bit today, but I think financials are overbought. It's going up today. All right, let's see what happens there. You know, the outlook for financials are fantastic. They really are. You know, I've been talking about that as well. But yeah, I think they're a bit overbought right now. That's all. So I'm not trying to add to those positions there. Okay, so trying to risk manage them. I mentioned coal stocks here. An area that may be overlooked is coal stocks. Like Trump's trying to get energy to data centers. He's enabling data centers to get local energy hookups, meaning they don't come off the grid. In 10 years from now, 15 years from now, you might have small modular reactors that generate energy from these data centers. Before then, the other source of energy you need. So what we saw also last week was this. You saw on Friday, when the market started to pull back, you saw international value go up, international stock. This is an interesting theme to keep watching, right? The whole world is buying US equities, right? There are ETFs around the world that trade at a premium to NAV. South Koreans love US equity. People in Hong Kong love US equity. People in Japan are doing carry trades with local currency to buy US equity. Warren Buffett is doing carry trades, borrowing Japan and buying US equities. You know, when the crowd is on one side of the boat, go the other way. Now, these are still fantastic businesses, right? They're amazing businesses. You don't want to not own them. That's not what I'm saying. But, you know, you should adjust when you're at these peak levels. And what makes it complicated is that, you know, if you want to trade dance partners, well, your dance partner is also kind of on the upper end of a range also. It makes it a little difficult here. It makes it a little bit difficult. So, but when you see both the pair and the counter pair, right? The counter pair here is China. When you see the US and China going up at the same time, then markets are probably overextended, because normally these are the opposites, right? They're like antagonists in a play. There's US versus China. The US and China are rallying together. You might have a mini euphoria. You might have a mini bubble, right? So let's take a look. You know, the China, how this plays out is going to be super interesting. Now, Trump has said he wants to get on a plane and go to China to work out a deal. He's very serious about that. He's setting expectations for himself, right? Like once he says, hey, I want to annex Greenland and make, you know, Canada 51st state. I don't think that last one goes anywhere, but, you know, people will ask him questions about that in a press conference. So he wants to follow through and get wins. Question is, what does a win look like for China? I think it's very difficult, because what is a detente, or what does equilibrium look like? China is hacking an incredible amount of American IP. You know, there's this reporting about how they hacked Verizon and T-Mobile and Sprint and got access to valuable information and contacts, including of you know, FBI and counterintelligence and politicians. A really serious hack. And then you have private companies that are getting hacked too. And this is part of the issue, right? I mean, they have a clone of the F-35 Joint Strike Fighter. So I have a proposal. I don't know if it's a real proposal or not, but it's worth shaking it up. So, well, two steps. First off, China is ahead in battery technology, right? BYD, which is a Buffett business, Buffett owns a chunk of it in China. They were way behind on EVs. Now they're way ahead. I mean, you can look up a video of EVs, China EVs on YouTube. You're going to see that they're ahead. They're ahead of Tesla too. They're not in the US market though, for different reasons, right? Tariffs are going to hold them back also. They're ahead on nuclear, right? They're building dozens of nuclear reactors. The United States is over cost, over budget, right? We forgot how to build nuclear power plants. GE shut that business down in the 90s under Jack Welch. Good decision on his part. Robotics are better. Michael Preck and I talk about this, by the way. Take a look at the podcast. It's on YouTube, Spotify, Apple. Look up my interview with Michael Preck. Michael Preck was a peer of Mary Meeker and Henry Blodgett. They were at Morgan Stanley and Merrill Lynch, respectively. He was the Goldman Sachs internet analyst, world-class thinker, really good guy, really impressive. He's on top of everything here. And so AI now, DeepSeek shows that China can close the gap pretty quickly. So here's my proposal. And here, I'll add one more point to this. So at Davos, I haven't seen the panels yet, but we're going to curate some of what we think might be interesting shows to take a look at. There was a panel on how should cybersecurity defenders respond. And I thought that was really interesting because that's the point, right? The cybersecurity defenders are the United States primarily and Europe, and then like China's on offense, okay? Now that leaves aside whatever military work, the United States is doing to penetrate China's defense system. I'm talking about like commercial hacking, commercial IP. What if we just let American companies and American hackers like have at it with China? Like maybe that's at the top. Maybe that's an equilibrium that both parties can live with. So I just don't see how China would ever stop doing that. So under what basis could you get to a resolution on tariffs? I mean, in some way, not in some way, in a very material way, DeepSeek's publishing of the paper on how they leveled up their AI and closed the gap with OpenAI through reinforcement learning, that was one of the two techniques they used, was a significant breakthrough. That's going to help Meta. It's going to help Google because they're going to get more AI per unit of cost than without that paper. And that's the benefit of technology. Once you read the paper, everyone benefits. That's the benefit of technology, right? Non-exclusive, non-rival risk consumption. It lifts all boats. It's the only free lunch is technology and productivity growth. Right. So why not? Like, I could totally see Trump getting behind that idea. I could totally see him saying, okay, we're just going to like hack your companies and share it with the United States. Like if Tesla had that battery technology, I'm just picking Tesla. It could be anyone. That battery technology is what also gives China an edge in drones because drones, a big part of their weight and payload is the battery. Right. So warfare platforms are going to shift to drones. So I think it's this kind of interesting idea. I don't know. What do you guys think? It's wild. I haven't heard anyone talk about it, but it could be an equilibrium. It could be like the equilibrium is like, hey, let's trade with each other because it's not easy to build a U.S. manufacturing comparative advantage. I mean, part of that manufacturing process includes having tens of thousands of mindless people just like snapping things into place. It's like working at Foxconn. It's not the work you want your kids doing. Automated robotics has a role to play, but it's going to take time, and a handful of companies are going to specialize in that. It's not an easy transition to make. If you want to make furniture, automated robotics, you're talking 15 years away, right? Automated robotics can't even handle industrial warehouse use cases yet. Amazon can, but it's not broadly out there, right? Like packaging, those are the initial use cases. They're not there yet. So maybe this is interesting. Maybe this is an interesting kind of equilibrium. It's like, okay, well, we're going to like hack your companies because you're hacking ours. You're not going to stop. Okay, we're going to go there and we're going to make your IP to the public and then we can trade with each other. That's kind of an interesting way. I don't know. So what about these hyperscalers? What are they going to do? So we're going to learn a lot tomorrow. Wednesday, when Meta releases earnings. Mark Zuckerberg's comments on the earnings call will drive the price of NVIDIA. Mark my words. You want to listen to that earnings call. Mark Zuckerberg's earnings call. Because they're the number 2 spender on NVIDIA after Microsoft. They're spending $50 billion plus on these GPUs. So what's Mark going to say? How does he react to DeepSeek? Does he say, first off, this is a win for the hyperscalers because they get more AI per unit of cost. That's an unambiguous win for the hyperscalers. And Meta, their share price, again, it's not a tech correction. The Bloomberg analysts, they had, okay, Meta's actually now down 30 bips. It was up 2%, then up 50 bips, now down 30 bips. But certainly, again, beating the S&P down 1.5, beating QQQ and all the rest, right? Meta, by the way, also is overbought, which we noticed last week too. I'll show you real briefly what I mean by that. This is Meta's trailing 3-year PE ratio, right at the highs. Okay, so I look at that and I say, gee, maybe this is expensive. Maybe it's time to de-risk some of this. I don't want to get below my benchmark weight though, but I don't want to necessarily be overweight, right? Now, by the way, after Meta reports, this is going to drop quickly. They're going to report earnings. the earnings and denominator will come up, and you'll see this drop around here somewhere. So, these are charts in motion. But, Meta's a winner. Google will be a winner. Let's keep going here. All right, so I guess we shift gears in the newsletter here. We talk about animal spirits. So there's two kinds of animal spirits. Like, one is in the public markets. We saw that last week after the inauguration, when these lunar, nuclear, and space stocks shot up the day after the inauguration. They've all given back now, right? These are like 1 day quick spurts of energy. They're really flighty. They're down. I hope you don't own them now. And we wrote as much too. But the other part, though, is that there's a real economic effect in small business and corporates. This is the more important part, actually, because this is real. This is real stuff, right? Like, people are going to spend more. Small businesses are going to hire more. The beige book will get better, right? Like, this economy is stronger than people think. We wrote about American Express's earnings. No better way to get a real-time look at the economy than corporate earnings. Much better than government data. Look at American Express results. 9% year-over-year increase versus prior year billables. Travel and entertainment subsector up 11%. Now, people are going to say, well, American Express, that's mass affluent. Well, guess who does the most spending? Mass affluent. And well, what about the lower income? Well, they're doing fine too. Look at Discover, look at One Main Financial, look at Innova. Those stocks are doing well. Now, Dollar Tree and Dollar General aren't, but that's more to do with the increasing dominance of Costco and Walmart and Amazon, and the continued rise of e-commerce, where I think I ordered a pack of AAA batteries, like $3. I pushed a button and they're there 5 hours later. How do you compete with that? When I go to a store and there's a Dollar Tree in my neighborhood, it's mostly to get fresh air and some light in my eyes now. I actually will take on the inconvenience to go out of my house to get some steps in. That's where we are at. That's where we're at. Okay. So, the consumer is strong, the economy is strong, and the animal spirits. And, what I said is, on the day of the election, I said, look, Trump win is 100 bips in rate cuts. And that's not a comment on how you vote or not. It doesn't really matter. It's like a cathartic event. It resets the board. People go from fear and kind of biting their nails to they have a path forward, and they're going to give him a shot. Most people will. And the people that voted for him are really excited. And so you're going to get more activity. You're going to get more real economic activity. So it's kind of that simple. I think the mistake a lot of these, quants make is they do these big fancy regression models, like trying to look at this and that and the other thing. It's like, dude, you just look out the window. So the economy is strong, consumer spending is up, the bull market is still here. Okay. Now this trade deficit is really interesting. This trade deficit talk. So the funny thing that happened last Tuesday is this. So last Tuesday, this headline hit at 8 p.m. This is Monday, actually, 8 p.m. Eastern. It says Trump is thinking of imposing 20% tariffs on Canada and Mexico. And then this is the futures market. 7:54 p.m. You can see it. Tanked, high volume, right? So markets Ron doesn't like tariffs. I'm kind of okay. I've made peace with bilateral tariffs to open up markets. I said that before. Universal tariffs, though, I'm not a big fan of. Okay. I do like several, if not most of the other Trump's policies, by the way. I think they actually make sense. This one doesn't make sense to me. So, but in any case, leaving that aside, you had the news about Colombia and tariffs over the weekend. We'll see how that resolves. But this is an interesting policy topic to watch, because how will Trump respond if markets decline on tariff actions? Right? He is the stock market president. 3 weeks ago, I was listening to him, and he rattled off the S&P 500, and then he specifically referenced the Consumer Confidence Index and the NFPI Small Business Survey. I was like, what? Never heard a president do that. He's a stock market president. His scorecard, he's telling you to the public, is the stock market. So is the stock market a disciplining force on tariff policy? It's a really interesting question. I don't know. It's an interesting question though. In 2018, someone in our chat pointed out that he was aggressive on tariffs even as markets were selling off. So maybe he's not. I don't know. So that's something that's the question to ask though, right? Let's take a look at Colombia and what happened there. See if there's any breaking news there. We can take a quick look. Okay, look, Colombia backs down on accepting deportees on military planes. So the tariff gambit worked. It was effective. And so markets didn't punish names that would be impacted by tariffs. So, we really don't have a good test control around this. We saw that data point I mentioned last Monday night, though, which was quickly reversed because Trump said he wouldn't do tariffs imminently, which is what the market thought might happen, right? So let's go back to the newsletter now. Okay. Jeffries ranks the Mag 7, NVIDIA, Google, Meta. I agree. Yeah, we've been talking about this for a while, right? Microsoft spends too much money on GPUs. It's great for NVIDIA. Tesla's too expensive now. The Q4 animal spirits are behind them. Amazon's not bad, but expensive. Apple's earnings growth is too slow to justify the valuation. It's been correcting. What else? Okay. So just briefly on the trade deficit, the funny thing about the trade deficit is that you couldn't have had SoftBank generate the $100 billion to invest in the United States without the trade deficit. When SoftBank invests in the United States, that's part of the capital account surplus. Let me break this down. I'm going to try to break this down in simple ways. I've done 3 or 4 or 5 posts on tariffs, trying to find a different way to explain it. I'll spend 5 minutes on this now, okay? So the way to think about it is the trade deficit provides the capital and liquidity for the rest of the world to finance American growth. Let me explain how that happens. So if you're an American and you buy a Toyota car for $35,000, you're handing Toyota Corp 35,000 American US dollars. Now, Toyota's an exporter. They export cars in the United States and they import steel and some other stuff from wherever they need to. So Toyota doesn't need those dollars. They go to their local bank. They say, hey, we want to sell these dollars. We want to buy yen. And the bank is trying to match buyers and sellers. So SoftBank says, oh, I'm a buyer of US assets. Can I have those dollars, please? So SoftBank buys US dollars and SoftBank is then acquiring US assets. In this case, investing in venture capital, right? If you have a US dollar held in Japan, it can only be put to one of 2 uses, only 2 uses. Either it can buy back American merchandise. And if they buy back as much American merchandise as they exported, then there's no trade deficit. That's one thing you can do with your dollars. You can buy stuff back from the United States. Or you can buy promises in the future. We call those bonds. That's what a bond is. Bond stands for credit. Credit has to do with credibility, has to do with trust. Or you buy stocks. It could be private or public, which is even riskier, right? So you invest in American business. So SoftBank wants to back these American entrepreneurs who are going to own far more than SoftBank would. SoftBank's going to pay them at a much higher valuation. And if that company is successful, America will be the better winner of that trade than SoftBank or Japan. Okay. So that's it. Follow the money. If you buy a car from Toyota, you hand Toyota 35,000 US dollars. It's in Japan. You can only do one of 2 things: either buy back other American merchandise or services. And they do, like software, like Microsoft software. They do buy those kinds of services. Or you buy bonds. And one of the reasons why these interest rates are going up, the long end of the curve, is because when the US has these tariffs on China, China has less capital liquidity to buy American bonds. Okay. By the way, I actually am all for tariffs on China. They have bad behavior. They need to be disciplined. You got to control. I kind of like this idea of ratcheting up tariffs if they don't behave. And if they do behave, then they ratchet down. So you got It's like kind of how you deal with your kids sometimes, right? So, but these are related ideas, right? You're importing capital from the world. Now, some of you are saying, well, is it bad if we're selling American assets? Well, I just gave an example in venture capital. No, it's not. We're all better off from having SoftBank launch a fund to invest in American entrepreneurs. Japan would love that. France would love that. Germany would love that. South Africa would love it. Brazil, they don't have that. SoftBank isn't knocking on their door saying, let's go build the next Silicon Valley. No, America's leadership position is in technology. The top 7 most valuable companies in the world were all birthed in Silicon Valley. And that dominance is set to continue to expand, not just Silicon Valley, but it's broadening out to other parts of the United States too, such as Detroit, such as Austin, Miami, New York City. Carnegie Mellon has a hub around it. LA, right? There's M13 Ventures out there. So that's a great. We got both sides of this. It's an incredible. And when you hand an IOU to someone, it's a promise in the future. We're getting real stuff today. Today, we get the card today. And we're saying, here's a bond, or we might pay back in the future. And by the way, what if the United States said, hey, China, we're not going to honor your bonds? I'm not saying they should do that, but I'm just saying that actually gives the United States more power in the relationship with China. There's an expression, if you owe your bank $1 million, you got a problem. If you owe your bank $1 billion, the bank has a problem. Remember the 2008 crisis? Right? Like if the bank's got a big issue on their hands, everyone's going to get loan forgiveness. They're going to term out the rates. They're going to say, hey, we don't want to go bankrupt. Let's cut a deal, homeowner. Stay where you are. Remember like HARP and the HAMP programs and all this stuff. So China's the bank. They have all these IOUs from America. And it actually advances US dollar hegemony because where we're importing these goods from, we're exporting bonds. So the funny thing is, from the balance of payments perspective, the higher level, there is no deficit because the trade account deficit perfectly offsets the capital account surplus, which is another way of just saying, when you buy the Toyota, the other parties either got to buy something else in the United States, like Microsoft services, Google services, whatever it might be, or bonds. Or stocks. Most of the time they buy the bond though. Most countries just buy bonds. Okay, so they're financing America. And they've got a stake in the United States. There's this old expression, 2 countries that have McDonald's never go to war. That used to be true until the Russia-Ukraine war. Maybe GPT can fact check Ani, but the general idea is true, right? When goods and services cross borders, troops generally don't. So Vladimir Putin's daughter owns American assets. Right? So, Chinese nationals in the Politburo own New York City commercial and residential real estate. You have Venezuelans that own tons of Miami real estate. All right. that advantages the United States. Right? People are rooting for the United States. Again, it goes back to what we talked about previously, and it's also here, is like the international demand for American assets is tremendous. South Koreans love Tesla stock. They are the marginal buyer. They're bidding up your portfolio. That Japanese yen-mageddon that happened in the summer, there are 2 things. One was hedge funds deleveraging, but it was also international investors that also were pulling back there. So, and then the thing is, the farther you are from the market, the less informed you are and the worse decision you make. You remember in the late 80s when people were worried about Japan being the next superpower. This happens every 20 years, like Germany, then Japan, then China, and it never goes anywhere. It's always the United States. It's not going to change. Okay. Japan paid an outrageous fortune to acquire Rockefeller Center. And it was the top of the market for the Japanese stock market. It went down for 3 decades plus. Now, that seller was an American. Are they worse off? Are they worse off for accepting a stupid price from an international buyer halfway around the world? No, they were not. They're better off. And by the way, we should check GPT if someone can check this, but I think it was then bought back again by like an American buyer later at a lower price, right? So, this is a good setup we've got here. The trade deficit enables is equivalent to international investors providing capital and liquidity in the United States. They are one and the same thing. You can't have a trade deficit without also at the same time having international investors buy American stocks and bonds. They're the same statement because the balance of payments must balance. The mistake is that, you've had a media for 30 decades saying, oh, trade deficit is bad. Look at that big red number. It's bad, 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 bad. And we must do something about it. And they're missing the capital account surplus, which has to do with US dollar hegemony and America being the best place for investing. That's why we attract this capital. The trade deficit will go away in a free market if America stops being an attractive place to invest, which would be very bad for the United States because it would mean the productivity rate for the United States starts to slow down and it would decline. We don't want that. Why is American productivity rate higher than anywhere else in the world? It's something we've talked about in our newsletter many times and on this podcast many times. It's the highest in the world. It's the envy of Europe, which is in a decline. Well, productivity growth is you have labor, and then you have the productivity of that labor. That productivity of that labor is capital. It's like technology. It's in the classic example of the farm. It's like the farmer having a plow. Or if you're at McDonald's, that quick checkout kiosk, that's a form of productivity. It's technology. It makes all the workers there that don't need to service the customer more productive because of self-service. All that's technology. And that capital comes from capital investment, right? So the United States has the most deepened capital investment because the world is giving us all this capital. It's incredible. It's an incredible boon. And unfortunately, many people don't understand it, and many people in economics don't understand it. But hopefully that explains it. I think that should hopefully make it very, very clear. So let's keep going. DeepSeek. I love this quote, by the way. This is great. This is a quote regarding DeepSeek and OpenAI. It says, kind of hilarious how DeepSeek is exactly what ChatGPT was supposed to be, what OpenAI originally promised before Sam pivoted hard toward profit. China going open source on AI is a wild plot twist, basically throws out every argument Vinod Khosla and others have made. This is like watching Communist Party write a love letter to decentralization. I mean, it's really incredible, right? Just the inversion of this whole thing. By the way, just briefly on the last point, economists do get the point on that trade deficit. Milton Friedman does. David Ricardo does. And this is what I just showed with you is the classical interpretation of economics, actually. It's not even controversial. Like people forgot it. I don't know what happened. They don't focus on it in school, and people get scared around words like the trade deficit, because it's an easy story to talk about, right? All right. So a lot of questions on NVIDIA. Okay. Let's take a look here. If you have any questions, drop them in now. We're researching coal stocks right now. We might have found one. We're still digging in, but who the hell's talking about coal stocks right now? If you're on a podcast, let's talk about coal stocks, then they're talking about what's not currently in focus. They're talking about what's on the margin of awareness and potentially moving into focus, as opposed to what's already in focus and moving out of focus, right? That's where you want to spend your attention. So yeah, we're looking at a few of those though. Who'd have thought coal stock? I mean, remember natural gas? One of the hottest themes. Like Shane Airy and all these now, all those are correcting now, like we talked about earlier. Kinder Morgan, KMI, the midstream, the pipelines. By the way, another funny thing, I was, again, anytime I'm driving somewhere, I put Bloomberg on just to get a basic sense of what's going on. And the analyst said, oh, well, midstream will do well. Okay, that means people are all in the market. People are all in. I remember last year, people were talking about Microsoft being AI on these Bloomberg analysts. The people they invite, just to be clear. So, if you are the first to process information, you have an edge. Okay, there are three ways to create alpha. One is information processing advantage. The second is speed. And the third is variant perception. This is just information processing advantage. Most people, they are looking to others to get a point of view, right? Nothing wrong with that. It's not your job. Well, hey, it's my job. That's my job is. I better get a point of view quickly, right? So, okay, so NVIDIA is what we do with NVIDIA. So I don't want to pay taxes on selling my NVIDIA shares, right? So we sold short SMH ETF. We covered it this morning, by the way. Okay. So that was a way to partially hedge our NVIDIA exposure. It's imperfect though, because it's not NVIDIA. And two, NVIDIA went down more than SMH. So, okay, what can you do? And third, we're always net long. So our net long posture going in this morning was 70%, which is as low as we'll ever do, because we're a wealth manager. We're actually not a hedge fund, even though we do a lot better than these hedge funds, but we're net long 70%. That's very low. That's a lot of risk, benchmark. It's called benchmark risk, your deviation from the benchmark, in our case, which is the S&P 500. So I think overall, what's happening is the data center theme is going on sale. The question is, will CapEx spend stop or not? The answer is no. Now, first off, we'll validate my claim by listening to what Mark Zuckerberg has to say. If he changes his mind, I will change my mind, right? It's not about being right. It's about making money. I have a hypothesis. Let's see what Mark Zuckerberg has to say. But here's why. Two things. One is, if you're a hyperscaler, your mission is to be number one. You have trillions of market cap at risk. NVIDIA just saw 600 billion in market cap. Someone do the math. In 4 or 5 days. Meta doesn't want to see that happen to them. Neither does Google. Neither does Amazon. And the stakes for being number one are dramatic, because if you win AI, if you win the next form factor for AI, then you get the lion's share of the spoils. That's how all markets work. That's how capitalism works. There's number one, there's number two, then number three is steak knives. You're fired. Remember that movie with Alec Baldwin, the Glenn Ross, right? Actually, number two is steak knives. Number three is you're fired. Number one is like you get a Mercedes or something like that for the high performance sales guy. Same thing in capitalism, right? So that they can't risk not being number one. The cost of not being number one is too significant to their market cap. That's one. Okay. The second thing is, the way a big company makes capital budgeting decisioning is typically an annual process. They're not going to pivot because DeepSeek just had this event in China that people are trying to get their heads around. They're going to say, okay, cool, let's learn from that technology. But they have to make capital spending plans and coordinate with partners that line up utilities and data center and rentals and permitting connections. And they've got a lot of folks on this stuff. It's capital budgeting. It doesn't spin on a dime. They're not startups. They're committed. They're pot committed, at least for the next 2 years. Now, beyond 2 years, we have to assess and reassess. Who knows? They don't even know beyond 2 years. They have a general idea, right? The Stargate project is a multi-year bet that Microsoft is making. Zuck could be more dynamic, right? In 2022, he cut spending dramatically. He said, all right, I'm going to cut all the spend on metaverse, cut it. And the company started generating a lot more free cash flow, became very cheap. And, they obviously did like a 5X on that. So a founder level CEO can be more dynamic, but this is a big strategic bet. It's not like they're going to suddenly stop spending money on CapEx. And what I would expect on NVIDIA, right? We talked about Meta's trailing PE ratio. Let's take a look at NVIDIA's now. So what's going to happen after NVIDIA reports? This is NVIDIA's trailing PE ratio, by the way. Okay. It's on the lower end of its historical valuation. After they report earnings, it's going to drop to like here. It's going to drop in the very low end. It's going to be a bargain. So the question is, how do you maneuver between now and then, right? Let's take a look at like Broadcom, let's say, right? It's still 20% cheaper than Broadcom, which is in the higher end of the range. And I think NVIDIA's got the edge over Broadcom. So yeah, I think if you look at the data center theme overall, let's take a look at Constellation Energy again. Let's just do a quick tour of the data center world. The data center world is kind of ablaze. It is in a correction. We saw these corrections before. You remember financials had a post this second half December correction. Financials now all-time highs, right? What about healthcare? Remember healthcare, the United Health CEO? That healthcare was on the rebound, and then boom, that's it. Tanks. Let's take a look at healthcare. Remember, United Health CEO assassination was right here, tanked. Now you're back and above. Okay. So this is a correction in a sector called data center, and you're going to see something similar play out. That's it. Now you just got to navigate the next 10 days. If you look at like XLV, you got about 2 weeks of this information getting priced in, and a lot of it's getting priced in very quickly. And NVIDIA is now the 200-day moving average. So it's, you got a very high volume here. So a lot of information is getting priced in. You're gonna hear like 20 podcasts talk about DeepSeek this week when they should have talked about it 2 weeks ago, like we did, right? Remember the last show was called "Podcasts Are Bad for Your Health." You have a lot of podcasts talking about DeepSeek. Then you don't have to worry about DeepSeek anymore because it's already priced in. That's how the ping pong game works with Mr. Market, right? You're focused here, Mr. Market's going there. Okay, I should find a football metaphor for that. Don't ask me about sports. I can't help you with that. You should let me know who's going to win. Is it the Eagles? So, yeah, the funny thing is I'm actually more constructive now. Like last Thursday and Friday, I was like, oh boy, this is not good. Yeah, Mr. Market's manic depressive. Now I'm like, I'm kind of getting interested in stuff on data center thing. So by the way, like we took our lumps like anyone else. We had our hedges in place. We took our net long down. We did all the protective measures we're supposed to do within our limits. But even with those limits, we're still net long. So it still sucks when you get the call right, but then your P&L is down anyway. But feel good because we maneuvered correctly. That was the right decision. We made the right decision around that. No, I can't do that because I will pay taxes. Now, if I have an ETF, I can sell NVIDIA and not pay taxes through an in-kind transaction. It's called in-kind transaction, which is incredible. You can just sell a security, swap it for another one with your authorized participant, the market maker, and you're good. We're at like 300 people on the Lumida ETF list. So, we get that to 500. I think we can launch that. You can check it out here. But that would be really fun. I mean, I'm looking at this. I'm like, gee, if I had an ETF, I could maneuver very flexibly, very nimbly, because you're seeing so many of these opportunities, these tactical opportunities. It's not a normal part of the market. But if it's there, why wouldn't you take advantage of it? Why wouldn't you adjust, right? I would. So any other questions? Why are data centers under so much pressure given surely inference demand is likely to grow, not reduce? Well, that's a really good point, right? You're making there, which is DeepSeek is having outage issues because they don't have enough NVIDIA chips. It's so funny, right? I think you have a good point. The question is going to be, does the world need that many data centers? That's what the market is saying, hey, we think the world needs 30% less data centers today. That's what the market's saying. You don't need all this data center spend because you're going to get more output for less CPU. I don't think that's the correct read. This is the space race. I think Mark Andreessen put it well. He said, DeepSeek is Sputnik. DeepSeek is Sputnik, right? Sputnik was the small Russian satellite that beat the United States to launch into space. That was a wake-up call for the United States. They were the first satellite to go into space. And it sent out a little beep. You could verify it. You turn on your radio transmitter, you hear the beep, beep, beep. And America did not like that. The public didn't like that. And then the response was vigorous and forceful. And then John Kennedy put a man on the moon. Like that was the counter response to Sputnik, by the way. Like, don't mess with the United States. So I think you're going to see a vigorous response. And it's going to, the CapEx spend, I don't think is going to decline. In 2 years, I don't think it'll decline. I think the other thing, by the way, is, Jensen made this forecast at the GTC conference in March of last year, where he said AGI, artificial general intelligence will be in 5 years. I think that timeline moved up. Like this innovation was significant. And the innovations they did, there are two innovations they did. One is around chain of reasoning, and the other was around reinforcement learning. So the chain of reasoning, OpenAI already knew that. They just hadn't published how they did that to the world. In the DeepSeek paper, they share how they do it, and it's very simple. It's a couple lines of code, essentially. It really wasn't that complicated. There's a blog that talks about what they did. And the second thing they did is reinforcement learning. This is the book that talks about reinforcement learning. It's called Probabilistic Graphical Models by Daphne Koller and Andrew Ng, who's like the top-notch people in AI. Reinforcement learning. It also means that the space of discovery that the AI engineers have explored actually has so much more to go. Because reinforcement learning, it is not like a novel technique. It's like chapter 5 of this book. I'm kind of surprised that I actually tried that. So when you launch these big training runs, so it takes a lot of money, you're committed, you have to wait months, right? It's like baking a cake that takes 9 months to build based on your initial recipe. So, I think the timeline for AGI is going to move up faster. The speed of innovation is dramatic. I mean, you can have like a college intern in your laptop now in terms of compute, right? Jensen is creating these new chips that are designed to be embedded into laptops now. I think 3 years from now, the ubiquity of high quality distributed intelligence is going to go up significantly. I think you're going to have a proliferation on the app layer, more use cases. There's an interesting argument. What was it called? Let me look this up for you real quick. Jevons paradox. Okay. So Jevons paradox was named after this English economist, William Stanley Jevons. So we noticed that when the steam engine was introduced, by the way, steam engine was a massive innovation. It's like cotton engine, steam engine, electricity. So they noticed that coal, which is an input into steam engines, went up significantly. So when the steam engine enabled more efficient transportation of goods and services, the demand for transportation increased. So you had more trade. And that's what this paradox is. That's what Jevons paradox is. I think that's true, right? So you had more coal demand. Now the question is, can NVIDIA win on edge AI? That's an open question, actually, because NVIDIA is not really competing on that side of things. Would they acquire a company like Qualcomm, though? Would Qualcomm acquire a company like Intel? Probably, maybe. We'll see. I don't know. But those are interesting things they must be thinking about. They already are. That form factor they released a few weeks ago is a way to enter the PC market, right? They're starting to move from these centralized data centers to the edges. And you're still going to have a lot of compute that takes place in the cloud anyway, and NVIDIA's indexed to that. Right, the most powerful compute applications will be on the cloud, but like driverless cars, like EV automation, all that's going to accelerate. Robotics will accelerate. I mean, they built a model for $6 million that rivals OpenAI's benchmarks. So the cost of intelligence got a lot cheaper. So far more use cases are going to come in much faster. So it's very good for humanity. It's exciting. Psychology will improve when they start to see results of this in the next year or so. I think GPT-5 will be a significant step up. Whatever they call it. I don't know what they call it. The next AI model, Meta Llama 4, all those researchers, I've read this DeepSeek paper, they have a new project and it's going to do incredibly well because they have more resources than the DeepSeek also. They care, but they don't care that they're spending more money. It's their job to be number one. That's the cost of doing business. If you're number one, you got to spend the most to maintain your pole position because the stakes are too high. That's the game theory. It's a prisoner's dilemma. They got to spend. Let's see. Well, we're still assessing this, fill out the form and we're getting feedback on it, but I don't know. I think it'll be American first though. So what else? Any other questions? Hope you guys had fun. I think, the bull market is still alive and well. I think great opportunities are setting up. We had healthcare correct a few months ago. We had financials correct. Those were both gifts from the market. Mr. Market every quarter is putting yet another theme on sale. It just happened with data center. That's why the bull market has legs, because when Mr. Market puts it on sale, those themes still have earnings growth. Those themes are still intact. So I hope you found this useful. We'll check in next week. Again, if you're in Dubai, shoot me a note. I'll be flying out there tomorrow with my lovely wife. So if you're there, we can all meet and hang out. It'll be a lot of fun. All right. Make it a great week. Be well. Cheers.